Time now for an in-depth look at the market news on this Monday, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thanks for coming on today.
Happy to be here.
Well, let's start with Wall Street. Stocks bounced back on Friday, led by tech shares. All the main indices higher, the Nasdaq by 1.2%, but U.S. stocks were still down for the week. What's the story in the global markets?
Okay, well, as you said, after falling for most of the week, the market rose on Friday, but not enough to recover. For the week, Dow fell by 1.1%, S&P fell by 0.6%, and Nasdaq fell by 0.7%. The fall in the stock market was due to the Fed minutes for July being released on Tuesday, and the minutes show that majority of the Fed members favored tapering within the year. Now, frankly, this is not much of a surprise, I think. I think most people were expecting tapering to begin somewhat at the end of the year or beginning of next year, but markets seem to be not taking this news very well. This type of tapering to begin fairly soon has not been baked into the expectations, and that is somewhat surprising. But perhaps because the markets are nervous, because the markets are now thought to be overvalued because of excess liquidity in the market, that these type of concerns about when the tapering begins have such a big effect on the market, even when people more or less expect it. The European markets move similarly to the New York markets. It was down most of the week, but it recovered on Friday, and it's continuing to rise in early trading today. Asian markets, the Shanghai market, Hang Seng and Nikkei, given that last Friday's Asian markets ended before U.S. Friday markets begun, the recovery that we've seen on Friday in the United States are coming around to the Asian markets today. All the Asian markets have been rising today. But for this week, the stock investors will likely take a calm down and see what's going to happen in the Jackson Hole meeting that's scheduled to take place this week.
Right. Let's talk a little bit more about that meeting. This, of course, is the Federal Reserve's annual policy conference. Normally, they meet in Jackson Hole, Wyoming, but it'll be online this year, and everyone is watching what Chairman Powell says about tapering in his speech there. What are you going to be watching at the Fed's annual retreat?
Okay, well, you have to remember that this is more or less a seminar for central bankers, academics, and private bankers. So it's not really a policy meeting, but still there will be many lectures by central bank researchers, including Fed researchers and academics. And Fed chairman's speech, often it's fairly technical, but it hints at future policies, so that's where everybody is looking at. The market analysts are divided on whether Fed Chairman Powell will actually announce when the tapering will start at the Jackson Hole meeting, but he is likely to emphasize that tapering is likely to begin soon. The Fed is seeking soft landing for stocks, financial markets, both in U.S. and globally, and currency markets. So it will continue to give hints about tapering until the expectations are baked in. Looking at last Friday's numbers, the U.S. stock markets, comparing it to pre-corona 2020 first quarter highs, Dow is 19% above last year's first quarter highs. S&P is 31% above. Nasdaq is whopping 50% above. And a lot of that numbers are going to fall, but obviously we don't want it to fall very quickly. Similarly, U.S. housing prices over the last year has gone up by 12.6% according to OECD. The housing price index, the Case-Shiller index, according to Professor Schiller, is right now the highest it's been since the subprime mortgage shock. So again, we want those prices to fall down slowly. So likely the Chairman Powell and other central bankers who are going to make presentations on the Jackson Hole meeting will continue to give signals that tapering will begin fairly soon, probably likely before the end of the year. But they also don't want to give too solid a signals because they don't want to have a rapid fall in these prices. They don't want to have a taper tantrum like we saw in 2013. Now, the lectures, as I said, are academic, research-oriented, so lectures are bound to include material on how to taper, not only when the tapering will begin, but how monthly purchases of $120 billion per month will be reduced and how long it will take for the purchases to go to zero, and when and for how long the Fed will start selling the bonds that it has bought. These technical details may help calm the markets once the tapering actually begins.
Well, it'll be interesting to see, and we'll be watching that, of course, closely. Now, it's been a rough couple of weeks in the Korean market, but local stocks were back up today on Friday's Wall Street bump. Chipmakers, some financials, bio leading the gains. Foreign investors returned to buying today, at least on the KOSDAQ. Tell us about the domestic market.
Okay, well, KOSDAQ ended today at 3,090.21. As you said, it went up by about 0.4%. Institutions bought, individuals and foreigners sold. KOSDAQ ended at 993.818. It went up by 2.6%. Institutions and foreigners bought and individuals sold. Basically, the reason that we had falling markets for so long was that foreigners were selling, and that's partially because of concerns about tapering. They want to get back into the U.S. markets in case that there is a taper tantrum. Another reason was that semiconductors, not only foreigners but also domestic institutions and individuals were selling semiconductor stocks like Samsung and Hynix, partially because there were some reports saying that semiconductor market for this year has hit a peak, that the semiconductor users now had built up a substantial inventory and they will not be buying semiconductors much for the rest of the year. But over the weekend, there were some countering reports saying that market is not oversaturated, that the demand will be strong. So we were hoping that Samsung and Hynix would make up some of the losses today, and it did start out very strongly, but in the end, Samsung returned to the starting price of 73,300 won, and SK Hynix fell by 0.5% at the closing of today. And another big mover today was LG Chemicals, the electronic vehicle battery maker. Over the weekend, GM has announced that because of a couple of fires that they had with the LG Chem produced batteries, that the GM will seek compensation from LG Chem, and that has led to a 9% drop in their stock price today.
Well, finally, Professor, we discussed the Fed meeting. Lots more coming up, though, including U.S. housing data, the Bank of Korea's own monetary policy meeting. What's on your radar in the week ahead?
Okay, well, it'll be very interesting to see what the Bank of Korea decides on two fronts. The first is a lot of people, including myself, are expecting the BOK to raise the interest rates, and there are some substantial number of analysts who believe that the BOK will not raise the rates because of the new Delta variant spreading. But for the people who do expect the interest rate to rise, there's a big question on whether it'll be 0.25% or 0.5%. So all of that is up to question. And then during this BOK meeting, they will also show their latest projections for the growth rate for the Korean economy. We'll see whether it adjusts because of the Delta variant, not only in Korea but throughout the world. Other statistics, on Tuesday, Bank of Korea releases the household credit data for the second quarter and August consumer trends. That'll show us whether the economy recovery is strong or not. And for foreign data, on today, the U.S. existing home sales and new home sales data should come out. We should see, as we mentioned, the U.S. home prices have gone up a lot. So we'll see whether that trend is continuing. And then on Friday, U.S. personal consumption expenditure price index will come out. This is a price index that the Fed looks at when they decide whether what to do with the interest rates. So this will be, at least for analysts, more important data than consumer price index inflation.
All right, Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.